What is going on, Alpha Hunters? Hope everybody is doing wonderful this Wednesday. Yep. Hopefully you're having a wonderful day. The market is having a very mellow day. We had a nice little gap up here on the SPY. Let's see, gapped up roughly 0.5%. We actually then continued to just trade down, just kind of opened higher, sold down all the way until about an hour ago. We got about a 0.2% negative, and then we've been in a nice little bounce here over the past 50 minutes. We are slightly negative on the SPY. Qs a little bit more negative. You see this huge red 5-minute candle start the day there on the Qs. Okay. All right. IWM. IWM first 30 minutes very strong. Look at that move. All right. All right, nice move there on the IWM. The DIA, the Dow Jones Industrial Average ETF, a little bit more choppy. A little bit more choppy there in that first 45. And then it looked like it had about 30 minutes, maybe even an hour, kind of bearishness that kind of came in. And then it kind of chopped down at the daily lows for about an hour and a half, 2 hours. About last 30 minutes or so, 45 minutes, been a nice little uptrend. So, yeah, we've seen some bearishness across a lot of these indices. Even RSP, nice little bullish pop there, first 30 minutes, nice pullback. Then for the next 3 hours, kind of just choppy here recently around where the market opened there on the RSP. So, how is everything looking on the daily action? The daily RSP not getting above, was that Monday's high? Throwing a nice little upper wick. Nice gap up today. I have no idea why the market gapped up today. I don't really think it was anything. Maybe yields continue to fall. We'll take a look. DIA made another high over last Friday. Okay. Even though it's down from its highs and down from its open, the DIA did make a little bit of a higher high there from Friday. IWM, yep, we saw that huge upper wicket shot up there, making a new high over Monday. Okay. Qs did not, definitely have not made a new trend high here. Kind of made sense they were getting some kind of bounce action here the past couple days. They were getting sold off the most over the latter part of last week, from like Wednesday to Monday. They were definitely the ones getting hit the most. But they were up pretty good yesterday. The Qs, definitely being led by big tech. So, okay, quite a bit of a gap up there today, but just got sold off. Definitely the most negative one. Those indices. SPY has not taken out last week's high yet. It got really close. Definitely got up to those Monday highs on that gap up this morning, but definitely did not take out last Friday's highs. All right. So that's the quick rundown on the daily charts. Let me run through this real quick. I'm going to check. Since we're kind of not really moving so much, I want to see what the indicators look like on the daily for all of these. So SPY looks like, the indicators, MACD, RSI, starting to look a little rollover-ish. Q's definitely been rolling over a little bit more. They've definitely been flat up here for about a week longer than the SPY. Okay. IWM. Okay. IWM, it seems like it's starting to roll over a little bit. Qs. SPY. Just trying to see how things look. The DIA, the Dow Jones Industrial Average, nice. Look at that MACD looking really good. Man, that looks so good there on the MACD. Even the histogram here looks really well. A a lot. I mean, it's holding up better than the Qs and the SPY. You know, you can see the Qs and the SPY here. The histogram's really falling off. The IWM's actually held up pretty well. The DIA is holding up pretty good. So interesting. RSP. Yeah, the histogram is also holding up there. The RSI is holding up. MACD is looking pretty good. Okay. One thing that's kind of interesting to note here on the IWM is we are getting a little bit of a lower low here on the hourly time frame. I saw that a little bit. You can see it a little bit on the daily, but it's a little bit easier to go intraday. You can see a little bit of a lower high here on the RSI and the MACD, but we made a higher high on prices. So it's a little bit of a divergence there. So just kind of an interesting look. I just kind of want to look at things a little bit differently. All right. I don't know if the market's going to do a whole lot until we get to Friday morning. A big reason why, here's a look at the VIX. So the VIX not really doing much today, down a little bit. A big reason why is we're going to get non-farm payrolls, unemployment rate, Michigan Consumer Sentiment Survey, not really a big deal. But these two, non-farm payrolls and unemployment rate, yeah, unemployment rate, if this starts to get to like 4.2%, over 4%, I think you're going to start to see people investors are going to start to lean a little bit more cautious. Especially if one of these unemployment rates kind of come up and it raises like 30, 40 basis points. And it's like, ooh, like if this one comes in maybe at 4.1%, and then the next one comes in at like 4.5%, the one that we'll get in January for December. If that one comes in at like maybe 4.5%, that would be, oh man, that'd be interesting. Look there on the market or on some economic data. So the DXY, yeah, we've seen the DXY continue to turn up this week through a nice little upper wick there on Friday. You see Monday, Tuesday followed through to the bullish direction. Not doing a whole lot today. Kind of seems like it's just holding, resting. Past 4 out of 5 days, it's been up. And 3 of the last 4 days, it's been up pretty good. So, yeah, I'm going to be real interested to see how this sets up. The one thing I would say for now, if this thing breaks this low that we put in back on November 29th, I mean, I'd imagine we're just going to be dropping. So maybe it starts to set up here to where it just kind of cools off, it retests it, and now it just sets up to roll over. Let me see where the fib retracement is. So the fib retracement's actually all the way back up to these lows right here. So I mean, we can make a lot higher of a run on a retracement. Okay. That'd be an interesting situation there on the DXY if we started to roll over. Gold up a little bit. Dollar's not doing much, so that's kind of an interesting look. Yields are getting crushed again. So they're about to come into a pretty good support and resistance spot. This spot that we hit in early March and early July, and then we bounced on a breakout. Like we broke out in August, and then we pulled back and bounced off that spot in late August. So about to come into a really important spot here on yields. I'd have a hard time believing the yields don't find some support somewhere to have a little bit more of a retracement, kind of like the dollar has. But let me take a look at the 10 and 2 inversion. So the 10 and 2 inversion is dropping off. So the 2-year yield's not doing much, basically. So the 2-year yield, yep, not doing much. It's actually even positive. That's interesting. So the 10 years continue to fall off. What about the 30? So the 30, so longer term yields continue to fall off, which is rather interesting because, well, if longer term yields, the ones that determine a lot of mortgage demand, real estate prices, if these keep dropping, and we start to see rent mortgage applications really tick higher because yields are dropping. And there was a report that came out about a month ago, or yeah, it was about a month ago, that if yields dropped, there would be a flurry of mortgage applications. And if you are one that's trying to buy a home, you're waiting for yields to come down or interest rates to come down. I would be locking up a home if you can afford it. Go get your home, go get your mortgage, and down the line, if years, a couple of years go down, and your interest rates continue to drop off, they drop off, back down to the low threes or whatever, below 3.5, then refinance your mortgage, that kind of stuff. But if yields kind of quickly snap down and then they bounce, and you miss that opportunity to buy your home at the lower yields that we're basically getting into, especially here over the past month and a half, that yields have been coming down quite a bit. Like you'd be kicking yourself. So if you're really wanting to buy that house, like you got to be taking this opportunity to be getting your mortgage rate locked in, and a couple years go down the line, interest rates continue to fall, then you just refinance. It's not a big deal. So, yeah, this is one I don't know if the Fed really wants to happen. That's the other thing. Like this continues to go back to lead to inflation. I don't really know if because this is the one the Fed can control, right? So I don't really know if the Fed really wants that, but we'll find out if that actually does lead to real estate demand ticking higher. HYG. Ooh, HYG. Man, this thing, it's setting up like it's about to explode higher. I mean, it's kind of getting volatile. It's getting pretty volatile, kind of compressed in here, kind of broken above these highs. So it definitely just seems like it wants to rapidly push higher. But the other thing is, it's not doing it. So I would give this thing maybe one more day. If it doesn't do it, I would take it off. Maybe even look a little bit more bearish here on the HYG. Because you saw how much those yields are really kind of dropping off. Except for the short term, which maybe is why the HYG is not continuing to push up. The 2-year yield, we saw that kind of a little bit more flat here over the past couple days. That's kind of what the HYG is looking like too. LQD continuing to push higher. This very much looks like the inverse of like 10 to 20 to 30 year bonds or treasury yields. So yeah, LQD looking pretty strong there. What about the TLT here? TLT, yeah, looks pretty aggressive. We saw those longer term yields really drop off here the past couple days. So the TLT looks pretty good. I wonder if a lot of that has to do because of the bond situation in China. And there's about like if you haven't been paying attention, Evergrade or Evergrande, whatever, Evergrande, right? Let's see if we can find something. Evergrande. So if you haven't heard that they are about to go through a major possible bankruptcy thing, and if basically the debt holders don't agree to certain things, like to be converted over to equity holders, it's basically game over. Either way, it doesn't sound great at all. It sounds like investors are about to be at a lot of value, And this is no small deal. Like, we're talking like billions of dollars. I don't see anything. This has been kind of a big deal. Like, I see more of it like around I don't know, Twitter and YouTube. So I'm surprised it's not covered more here on like Finance Yahoo's homepage. Anyways, maybe that's why you're seeing the flood into treasuries. People trying to just go to the safe spots. So that's why you're seeing like yields actually come down. Because people don't trust the Chinese market. Is possible. Anyways, take a look at that sector rotation. That's a very interesting story. I don't really get into that as much, but if you've been paying attention to that, or I'd highly recommend paying attention to that, or check it out, because it's kind of an interesting situation over there with Evergrande and um, what's going on with the bondholders of that company and the real estate and all that that's having to go on. Let's see, what was it? Oh yeah, sector performance. All right, so we got utilities leading the way, discretionaries also outperforming, industrials outperforming, healthcare, materials, real estate, communications outperforming on the day. Underperformers, financials, staples, tech, and energies. Okay, I'll take a look at energies. They seem to be down pretty good. Energies, they popped early on, and then you see them roll over. So without the gap, energies have definitely been volatile throughout the day. You can see utilities definitely leading throughout the day. Healthcare, staples. Ooh, all defensive sectors up at the outperforming the best performers of the day intraday, not taking into account the gap. And staples apparently had a pretty good gap down. Or maybe they just didn't have a gap down, or it was a very slight gap down, but they just haven't gotten sold off. Like, it seems like a lot of other things have gotten sold off throughout the day. Anyways, so staples seem like they're holding up pretty good intraday. Discretionaries, industrials, materials, communications, real estate, all outperforming. Energies currently right now in line with the market. They've just kind of just been really volatile throughout the day. Grief. Financials and tech underperforming for the day. Okay. Okay.